Good afternoon, I'm Nancy Allen from RE/MAX Affiliates, and I'm pleased to be here today with mortgage agent Nancy McCallum from Dominion Lending. And we are going to discuss some of the recent changes in the mortgage rules that are affecting buyers in the Ottawa area. So welcome, Nancy. I know that there's a lot of information out there today about those rules changes, and I think people are a little bit confused and don't quite understand how it's going to impact them and perhaps their purchasing value.
Well, let's hope I can simplify that for them, Nancy. It's a big change, and consumers in the past, before these changes, were typically able to qualify at the same rate of the mortgage that they received. New regulations, B20 as they're called, by the Office of the Superintendent of Financial Institutions, mean that now even clients who have 20% down need to qualify based on a stress test. So they either have to qualify based on a rate 2 points higher than their rate that they're receiving, or the benchmark Bank of Canada rate, which is currently today 4.99. So when you qualified before at 2.99, you had a lot more buying power than you do at 4.99 or potentially 5+. Last year, these changes came into effect for your typical first-time buyer who would use high ratio default insurance. Right. That's your buyer who might have 5 or 10% down. So we went through this a year ago, and we thought it was going to be a big impact, and we actually found that it wasn't as bad as we thought. Okay. So how does it affect that 20% down now? Just as I said, they're going to go through the same stress test and the same stringency that a buyer with 5 or 10% down. The biggest impact will be on potentially the amount of financing that they can receive and that they qualify for. With a lower rate, more buying power. So we're looking at maybe, depending on their debt load, up to 20% less. Now that's a pretty high number, and again, it's very individual.
Right, so they're dependent on the individual.
Dependent on their income level, their debt level, and of course the government is trying to, tighten up and have people in a position that when rates do go up, that they will find it easier to manage that increase in their debt load.
Right, so mostly the people that are looking to probably move up to from like a townhome perhaps into their first single home.
And those are people who are typically more financially mature anyhow. Right. So in our Ottawa market, we don't really see, a market that is going to be that stressed. Our home buyers, our demographics, we have a large government base, a large public service base, and a large high-tech base. Generally, your buyers that are well-educated and good incomes. Ottawa, according to Genworth and Canada Mortgage and Housing, is going to be a very good market in the coming 2 years, they predict. We have those stable things. Our buying power is still there, as you look in other parts of Ontario with extremely high purchase prices. We haven't experienced that. So stats are showing that the Ottawa market is going to be very strong, very positive, and these changes shouldn't have a bad effect on it.
Great. So I think that right now the news out there is everybody needs to hurry up before January 1st. I think it's still important that everybody meet with their mortgage agent to discuss their individual situations and not be panicked or rushed or spooked by some of these new rules. Would you not agree?
Absolutely. We talk to lenders and they're telling us they've taken their existing database and existing mortgage base and have re-stress tested it to see what it's going to look like for them going forward. And they've said that they would still approve on the new rules. They'd approve over 90% of